Hi, my name's Russell Emerson. I'm the real estate editor of The Advertiser. Last year, the median house price in Adelaide rose a phenomenal 18.6%. Now, we're still waiting to see what's actually going to happen in the first quarter. In fact, that data will be in today's paper. But today we're talking with the Chief Executive of Harcourts Real Estate to find out about how he feels the market's going and where it's headed this year. Welcome.
Thank you, Russell.
I've spoken with a few agents who've actually said that they've seen some consolidation of the market, in particular buyers sort of backing off. What's your experience been like?
Our figures for the first quarter have still been pretty strong. A little bit of slowing with the last interest rate rise, which also coincided with that heat wave. So we're not too sure whether it was weather or interest. But the last quarter's been good. Two things have happened. Auction rates have slowed down. We're into a 60% or thereabouts success rate at the moment. And towards the end of last year, we're up in the 80s and even 90%. So certainly activity under the fall of the hammer's dropped a little bit. And length on market's increased. Yeah. So property's taking a little bit longer to sell. So I guess from a consumer's point of view, it means that they're spending a little bit more money in advertising and things like that. So from an agent's point of view, we have to be more careful with where consumers spend their money, make sure we're getting the maximum value for their money. But look, as far as it goes, just a really good, strong, solid market. So it's come off the absolute highs, people paying ridiculous money to secure it, down to a more normal market.
Yeah, the longer time on market and I guess from a buyer's perspective, you have to watch out how much you're spending there. Does that also mean that there's, I guess, some of the exuberance has been taken out where last quarter last year, a price would be quoted and then the enthusiasm would be then you quickly see that surpassed. Are we seeing some narrowing there as well?
Absolutely, that's exactly right. We have to be really, really careful where we place consumers' property onto the market, how we market it, make sure that we're not building vendors' expectations too high. And I guess that's the trick coming off a really, really strong market. Vendors' expectations can still be in the clouds to a degree. Yeah. So we've got to provide all the comparative information that you're providing in the advertiser and just make sure consumers are really well versed with where the market is.
Yeah. Do you, well, I guess we tend to talk about general sort of, 18.6% across Adelaide, but really there's some sort of separation between areas of Adelaide. Do you see, I guess, like a separation or a two?
Top end of the market's still really strong. So
top end, how much?
Top end, look, we're selling a lot of property in the millions at the moment. $1 million for Adelaide 2 or 3 years ago was a big figure. It's really the norm now. It's incredible. But top end, I guess, is 750 up.
Yeah.
So really, really strong in that area. Some of the slowing surprised us in some of the regional areas. Whyalla, for example, has slowed. Port Pirie and Port Augusta. We thought through, the booms that have been talked about in the resource sector, that would have continued to move along. And some of the cheaper property where the consumer is just finding it a little bit hard to borrow money. Banks are a little bit tighter with their credit ratings and things like that. So the lower end's tightened a little bit as well.
How about rents?
Rental market, I've even got my figures here, 1.9% Russell vacancy rate, which I'm told is, great. Yeah. So it's a low vacancy rate. Sometimes they sneak up to the 4s and the 5% vacancy rates. They're expecting them to increase just a touch over the next quarter. So, my news is that it'll sneak into the 2s, but still very, very tight. But across the board, 1.9 and maybe up to 2.5. There we go.
Prediction. Wow. Okay, so now at the risk of being wrong, where do you see the hotspots in the next, say, few months, or what are we going to be talking about in 3 months' time?
We've been told that the interest rates may rise by another 0.25 in May. I was hoping that it'd be steady for the next quarter. And, unfortunately for consumers, again, the banks are getting tighter with their credits. So, again, what I've been told is some people are going to find it a little bit harder to borrow money or won't be able to borrow as much money, and that'll obviously impact on our market to a degree. So I'd say, look, the next quarter for us will just be steady as she goes. I think it'll be pretty much a mirror image of the quarter that we've just had.
Okay. Thank you very much.
No, that's a pleasure, Russell.
So take a look at today's Advertiser, where we have a suburb-by-suburb breakdown of what sales have occurred over the last 3 months. And don't forget to look at Adelaide Now on Monday, when Greg will be joining us for a blog to comment on those figures. And thanks very much for joining us on Adelaide Now.